All right, joining me is Sylvia Jablonski, CEO and Chief Investment Officer of Defiance ETFs, who back in August, they launched the first leveraged single stock ETF on MicroStrategy. That was here in the US. And this initially provided 1.75 times long daily exposure to MicroStrategy. It now provides two times long exposure. The ETF is the Defiance Daily Target, two times long. I'm going to say MSTR ETF. The ticker symbol is MSTX. And I'm telling you, this thing has been a massive success, already around $2 billion in assets. It is a top 10 or 11 ETF launch of 2024. That's out of 700 ETFs. But Sylvia, it is always great to connect. Thank you for joining me.
Yeah, great to be here, Nate. Thanks for having me on.
All right, so look, I thought that you would be the perfect guest this week because, as you know, one of the bigger crypto related news stories over the past several days has been MicroStrategy being selected for inclusion into the NASDAQ 100 index. The company will be added next week on Monday. And
Yes.
we're obviously going to get all into your specific ETF, but I'm just curious what you thought about this index inclusion. Like, was this on your radar when you launched MSTX back in August?
Kind of all of it was on our radar when we launched it. We had been talking about the stock for a long time. So, if you kind of like backtrack a year or more ago, once we figured out that Bitcoin was going to be approved in an ETF structure and, people were going to be launching Bitcoin ETFs. I mean, we were trying to get into that race. And then a lot of, first movers moved quickly. And turns out that some of them were massive asset managers and things like that. And we thought to ourselves, like, it's going to be, we're probably going to lose that race if we try to launch just like a Bitcoin ETF now or Ether ETF. There's just too many, fingers in the pot here. And we just started looking around at like MicroStrategy and thought to ourselves, well, hey, this is arguably a better Bitcoin ETF, right? Or a Bitcoin idea, because every time Bitcoin moves, MicroStrategy tends to have a leveraged relationship in terms of the move with Bitcoin. So if Bitcoin's up, you'll see it up two, three, four times. That's what Bitcoin does. And so we thought to ourselves, like, if you leverage that up even further, you have a really good, interesting short-term tactical trading vehicle there. And so we were thinking more in terms of, Bitcoin and crypto is so popular, retail money, institutional money, the commercialization of crypto, the new president, deregulation, like ETFs, all of these things have made it something that people are looking to buy and invest in. And so we just thought it would be super, super popular. But kind of no surprise now that it's being included. I think, at this point that the inclusion is warranted. It's also representative of what NASDAQ, tries to be, what that index tries to be, right? It's, arguably should have been there for a while now. And we're happy to see it there.
So it's interesting with the origin story behind this MicroStrategy ETF, because with what you just described there, it sounds like maybe you were taking a look at the spot Bitcoin ETF category. But to your point, so many players came into that space and it is highly competitive now. We saw fee compression pretty quickly in that category. So I would say in hindsight, it looks like a very smart move that you went the MicroStrategy ETF route versus the spot Bitcoin ETF route.
Yeah, exactly. And you and I were talking offline a little bit about this when you're a startup and a smaller player. Like, are we realistically going to go head to head with State Street on SPY or IVV and BlackRock and things like that? And Bitcoin is becoming this super commercial, massive investment opportunity, and so it kind of felt like that same thing, right? Like, are we going to compete with them on that? No, probably not. So let's do something different and innovative that doesn't exist, and we got it out there. Like, I think a few years ago, the company wasn't necessarily as popular. People didn't know about it. And, now you hear Michael Saylor out there and, buying 50 billion worth of Bitcoin on the balance sheet. It's a Bitcoin proxy.
How difficult was the regulatory process of bringing this product to market? And I know I mentioned at the top, you started with 1.75 times exposure. It's now at two times leverage exposure. You made that change at the end of October. Was that just a product of working with the regulators to crank up the juice here? And maybe just talk about the regulatory process overall.
Yeah, sure. So whenever you have a stock that is, highly volatile, you have to, essentially prove a couple of things when you go and file that ETF. And one of those things is called like a VAR test. And you have to talk about, kind of like what the different scenarios are on different, market pullbacks. What does this ETF look like? What will its performance look like? Liquidity? How will you be able to get your exposure and things like this? And so, yeah, we knew that it would be super volatile and that we would have to, kind of know how we were going to get the exposure that we had. And when we came out with it, the people spoke and they wanted more leverage. And so we went back to the regulators and asked for it. And again, we had to, kind of prove that we would be able to get it and that it would pass this, kind of requirement of theirs. And we got it and we're able to bump it up to 2. So we're very happy about that. But that was like 100%. The public spoke and we gave it to them.
Okay, so look, I think you know that I'm really big on ETF education, and I thought as part of this conversation, it would be helpful just to talk a little bit about the mechanics of how this ETF works. Do you want to explain what it holds first and just how you attempt to achieve that 2 times daily exposure to MicroStrategy?
Yeah, sure. So it's called the 2x, 2x daily MicroStrategy, right? So every single day we're trying to get 2 times the performance of MicroStrategy on a daily basis, and it's a target of 2 times the performance, right? So obviously we do our best to get to 2x, but we know that the ETF is what it is, and perhaps it could be below the target. Wouldn't likely be above the target, but pretty much we're trying to get that 2x daily. And the way that we do it is we use different derivatives contracts to do that. So we use swaps, for example. We enter into swap agreements with different counterparties, and they give us exposure to MicroStrategy via a total return swap. And then we also use options. And essentially we're using flex options that allow us to get, again, Delta One exposure to MicroStrategy within the fund. And so on a daily basis, we're just, looking at MicroStrategy does and submitting our trade to our various counterparties, the options, on the option side and the swap side, and, managing the fund to 2 beta on a daily basis. And so just like a little more education for those out there trading this is like trading is the key word, right? So with levered and inverse ETFs, you want to be monitoring your portfolio daily. You want to almost look at the rebalance with us on a daily basis and make that decision as to whether or not you have conviction that the trend continues. With levered ETFs, inverse ETFs, anything with 1.5, 2 beta and higher, trend is your friend with these, right? So if you get a market that's kind of moving upward, compounding and rebalance work in your favor. And you'll probably get more than 2x MicroStrategy over a period of time. But in range bound volatile markets, you could do worse than, whatever the final performance is of MicroStrategy over time. Like if it's down 2, you wouldn't be down 4, maybe you'd be down 6, maybe down 1. So volatility is challenging for these products. And that's when you kind of experience losses and decay. So actively monitor and manage these products for sure.
Yeah, I'm glad you mentioned that. I mean, with that daily reset, you hit on the point exactly. These products are path dependent. It
Yes.
depends on what the market is doing. And it really just comes down to math when you start talking about things like volatility, decay. I don't want to get too far into the weeds, but the point is it is a daily reset. And so if you're holding these products for longer than that period of time, you can't have a deviation from maybe what you would expect on the underlying. Going back to what these hold, I have 2 questions. The first, do you mind just explaining what a swap is for people who are unfamiliar? I think a lot of people are familiar with options, but
Yeah.
what is a swap?
Yeah, so a swap is just basically a contract where we, the issuer, have an ISDA agreement, basically like a legal agreement type of term sheet with a counterparty, a bank, that gives us exposure to the underlying asset. And so we post collateral, and that collateral could be whatever the percentage is, 10 to 20%. And in return, we're getting essentially the exposure to the underlying asset MicroStrategy that that we need. And every single day, we're buying and selling exposure on a regular basis. That swap can be kind of like trued up, which means you exchange the performance, you exchange any kind of like P&L and financing fees. But in the most simple way, it's almost like we're paying a financing fee we pay them like, overnight LIBOR plus some kind of rate, which is the charge. And the bank earns their money through that rate. And, in return, we get this exposure.
Okay, and then on this topic, and I want to make sure I have this right, but My understanding is because of the significant investor demand you've had for MSTX,
Yeah.
you've run into some, I'm going to call them challenges in gaining full exposure through swaps. My understanding is initially you were attempting to get all of your exposure through swaps, but because of the demand, you have had to go into the options market. Can you talk a little bit about that? Like how much of a challenge has that been?
Yeah, and so I think this is really interesting because I've seen this covered a lot in the press recently that that these ETFs are almost in a negative way. And what I would say is that and you've talked about this stuff too in the different types of products out there in the ETF space, but this is the year of like ETFs getting creative, right? You have so many like income related funds, whether it's, Defiances, yield maxes, things like this, where people are using, selling covered call or slightly in the money puts to generate income in a fund. And that's something that hadn't been done before. And I think through that, a lot of issuers like ourselves and, also our competitors, like we've become really, really comfortable with trading options. And we've also figured out that like they're sometimes more efficient than swap and sometimes cheaper than swap and sometimes more cost efficient. So it's a two, pronged answer. Number one, yes, we do have a lack of counterparties that have come in, right? A lot of the big banks are not, working on single name levered ETFs. They prefer to stay away from it. And there's a variety of reasons for that. It could be concentration risk. It could be that they have too much exposure to the name in the different, areas of the bank, whether it's like equities, options, exotics, whatever it might be. And, they're tapped out, whatever it might be. But there's been this, awesome bench of players that have come in to the space, and I think they're really kind of like reaping the reward of giving us swap coverage on this. And so, A, we definitely do have good swap exposure, but B, we've also figured out that options are a really efficient way to manage these funds. And so, whether it's because on a particular day a swap counterparty gives us a limit, or whether it's because trading the options position that day is way cheaper, and we're still at Delta One, like we're going to try to manage the fund in the most efficient way that we can.
And so
But
do
yeah,
you feel, yeah, do you feel fairly confident that, and it's not going to be perfect, but you're able to achieve the ETF's goal of that two times leverage exposure using this combination of swaps and options? And again, it's not going to be perfect, but you feel relatively confident.
yeah, we feel relatively confident. And I think, the reason we use the word target 2x is because we know that on some days, if there is an issue with getting exposure through swap, or if the market moves after hours on us, or, something happens with an options position, where we're not quite Delta One, there could be a deviation, but we feel confident that on, most days we will be able to achieve that 2x target. On the days that we can't, again, we just remind everybody we're going to do our best to achieve it, but it's our target, right?
Going back to this massive investor demand for MSTX, obviously you thought this ETF would be successful or else you wouldn't have launched it, right? But did you see over $2 billion in assets? And what are we at, 3 or 4 months since launch?
So we definitely had conversations along the lines of this is for sure going to be $1 billion ETF. And like when we were thinking, when you kind of like think about launching products, you try to project out like what do we think realistically we'll get in the first year. And this is like startup mentality too, right? We have a balance sheet. So what happens? This is what it costs us. Like at what point do we break even? And so we were thinking like, okay, well, we're probably going to break even pretty quickly. Let's call it like worst case scenario, half a year. So we knew that it would be wildly successful. Like we expected billions, but I think we expected that to take a year or two, not a handful of months. And so that's been awesome. But, kind of why, right? Like look what's happening with Bitcoin. We had the election, we have this crypto friendly president now. We think anyway. And so it was just kind of like a recipe for a lot of things going right this year for crypto related products.
In terms of MicroStrategy, the company itself, so we talked about, I always like to focus on ETF education, but I also always like to take a full 360-degree view of whatever ETF or investment I'm covering. And I've actually tweeted out something to the effect of these leverage MicroStrategy ETFs could, and I say could, go to zero, right? If you had a big enough down move in
Yeah.
MicroStrategy, things could accelerate where selling begets selling. Of course, with these leveraged ETFs, because you have that daily reset, you would be selling exposure into any down move. I'm curious how you think about that. or how you think investors should think about that. And let me just add, I don't know if you saw
Yeah,
this, but the Wall Street Journal, they recently had an article where they
I
quoted an investment firm. Did you see this? Where they said they like estimated the probability of the leverage MicroStrategy ETFs going bust at something like between 20 and 50%, which that isn't necessarily a great prognostication, pretty big range, but you get the point. So how do you
yeah.
think about that?
Yeah, I mean, I get, it's funny because when we saw that, we were thinking like, so do they think, Bitcoin's going to zero or, because that's kind of what I think would have to happen if it, if there was, kind of that move. So there's a couple of things. I mean, I've lived through some of this stuff, right? Like during COVID, for example, when, all of tech was crashing, I saw levered inverse ETFs just, like crash at a never seen pace before. I was around for 2008 in the financial crisis where there was like FAS and FAZ, the financial bull and bear ETF, and like the swings on that. So there's a couple things like, first, these ETFs have protective language in the prospectus. So like, let's say that MicroStrategy, crashes, right? The bear fund would probably perform in that, in that example, right? And so I think investors would probably go over there. But in terms of the bull fund, like once we start seeing these massive moves, and we saw it with Super Micro too, they had like a massive move a couple of days. We have a levered fund on that. We start talking to our counterparties, our traders, our PMs, and the regulators and the exchanges, and we start making decisions, right? Like, should we, do a reset now? Like, what's going on with the market? And so ETFs have some tools and things that they can do if you just see the product kind of like spiraling. So, first of all, reverse splits are on the table. You can kind of like get it back up to, a decent tradable price. If there's, a massive market movement, we could do an intraday reset and kind of, restart the leverage point at a different point in the day and kind of reset. We could halt creations. We could, like we would work with regulators to kind of like figure out what to do. I would argue, and I know it's not like the point really, but any stock can go to zero, right? And when you're trading levered and inverse ETFs, like you're trading things that, if there's a 25%, 30% move, like you have to understand that, 2-3 times that, like you're pretty close to wiping out your fund, right? So there is, and it's never happened, right? And I think that's also why regulators have these issues and, mandates around VAR testing and things like this. But, that's why they're daily trading tools, and on a daily basis, it's going to return what the market does. And, there are things that we can do if that particular day is a massive drop or a massive, bounce to the upside. You could also not get the leverage, right? Like say it takes off 100% today, right? We could be in the position where we might not get that 2x target because we have to buy so much exposure. So there are a lot of different things that happen with these products.
No, that's well said. I think a really nice, well-rounded view of the different options there. And by the way, I'm glad you mentioned the bear version of this strategy. I should have noted this before. So that's the Defiance Daily Target 2 times Short MSTR ETF, ticker SMST. But nobody really wants that one right now, do they? Everybody wants the bull version.
Yeah, there were a couple of days for sure where we saw some assets flow into it. And usually it's kind of like counterintuitive, right? Like when it's really, really rallying, a lot of times you'll see probably, and I think that's probably like the professional institutional crowd, like they'll start buying the short fund to hedge their exposure, or else they'll double short the bull and the bear. That's another trade that is out there because it's so volatile and range bound. Like I think the short fund gets some love from the double short guys out there. But yeah, I mean, for now, it's just been in the bull fund.
And continuing down this path, just with MicroStrategy and specifically this, Bitcoin treasury strategy, I'm sure you saw that earlier this week they acquired another 15,000 plus Bitcoin.
Yeah.
So altogether, the company holds something like 440,000 Bitcoin. And Sylvia, I would say, from my perspective, there's a lot of debate around what MicroStrategy is doing. And the way that I would frame that debate is there's one camp that absolutely loves this, right? There's this
Yeah.
concept of Bitcoin yield and how existing shareholders continue to see their Bitcoin per share increase. But then there's obviously another camp who I would say, frankly, they compare this to a Ponzi scheme, if I'm being honest, right? They would say the reason existing shareholders' Bitcoin yield is increasing is because new shareholders are willing to pay a significant premium for new MicroStrategy shares, right? And that works as long as you have new buyers that are willing to pay that premium and the price of Bitcoin continues to go up. So I'm just curious, how do you think about MicroStrategy's, quote unquote, Bitcoin operations here? Does this all make sense to you?
Yeah, I mean, so we've heard, we've heard and we've talked with Michael Saylor and heard him talk about, kind of how they run their strategy and their view. And from everything that we see and we're told, like this is a company that just has been, smart enough to kind of get this spot that they have as this Bitcoin proxy, and they're using any cash essentially that they can get their hands on to buy more Bitcoin and continue to experience their growth in that way. I kind of can't comment too much on maybe the thoughts on like what they're doing in the strategy. All I would say is that like all of these things and like these issues, these kind of debt issues, and using fixed income as a tool to kind of gather that Bitcoin to boost the equity. I mean, all of that stuff is regulated, right? I mean, they have to file reports. They're a regulated entity, and so I think that as long as we kind of see the regulation and see the reporting and their disclosures, and it's kosher, then we don't really have a problem, right? But we obviously think that the company is doing a great job in buying crypto and doing something really unique. And I think like all of the pricing and issue details and information is out there too, whereas like a Ponzi scheme is not really that, right? So I'm camp number one on this, but that would be my take on it.
Let me ask you this. If we put MicroStrategy aside, do you have any strong
Yeah.
views on Bitcoin itself? And I think MicroStrategy, you mentioned this earlier, is viewed as a leverage play on
Yeah.
Bitcoin. And of course, your ETF is a leverage play on MicroStrategy. But if we just get down to, the foundation here, it is Bitcoin. And it's funny because I was thinking back to a conversation you and I had. This was probably 2 years ago on my ETF Prime podcast.
Yeah.
And I remember talking about some Defiance ETFs that were focused around blockchain and NFTs. And so,
Yeah.
you were probably a little bit early on those, but the reason I bring those up is it seems like you've clearly had an interest around crypto for a while now. This isn't something that you just dove into overnight.
Right.
So, what do you think about Bitcoin or even just the broader crypto ecosystem?
Yeah, and it's so interesting because I think about like sometimes we are way too early, right? Like we had a quantum ETF before there was AI, the chatter around AI and quantum, and like we also had a short block ETF at one point. And yes, you and I had spoken about our NFT ETF, and look, we had really high conviction about that ETF, and if that was around right now, it would be doing very, very well. But obviously, the investment community spoke, and if you don't have anybody trading or buying your product, then it doesn't mean that it's no good, but it does mean that it's unpopular, right? So yes, we have been in this space for a long time. I think that 2 years ago, I was out there saying that I think Bitcoin's going to hit 100,000, and I would get all these like funny texts as Bitcoin was on its way down. Like, aren't you glad you said that on, out loud and whatever. And it's documented now. And now here we are. Right. So, I have high conviction in Bitcoin. My whole team does, right. We think that there's a lot to it, whether it's the technology, whether it's now the commercialization of it, the fact that all of these ETFs are out there buying it, the fact that potentially like 401ks are going to buy it, again, transfer of wealth to the younger generations that can't get enough of crypto. And then, the bigger picture, right? Like, are we going to have a government that ends up investing in Bitcoin? Like, does this go even further than we see it now? And plus the big buyers, like we were talking about MicroStrategy, obviously you have these massive buyers of crypto that are just lined up to keep buying it. And we know we have that information. And so, I wouldn't be surprised if we saw 200,000 on Bitcoin, like much faster than we got to 100,000. And so, yeah, I mean, I think the sky's the limit here.
Well, all of this is going to be a fascinating story to continue watching in
Yes.
2025. You have a front row seat to this. I'm going to be watching from the cheap seats, but congratulations on all
Thank
the
you.
success with MSTX. Really happy to see it. So congratulations on that. Thank you for joining me this week.
Thank you so much for having me.
That was Sylvia Jablonski, CEO and Chief Investment Officer of Defiance ETFs. I hope everyone enjoyed this episode of Crypto Prime. As always, please leave a review or give us a like wherever you're listening or watching. We're on Apple, Spotify, YouTube, pretty much available everywhere. So give us a like, and I'll see you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.